we are going to be covering why smart money traders fail, right? How does one smart money trader succeed and one fails when they're both trading the same concepts of supply and demand with changes of character and liquidity? Well, in this video, we're going to show you exactly how to do so. So, first things first, right, is smart money traders, a lot of the time, they just want to trade changes of character and supply and demand that cause those changes of character. Little do they know that in one single price leg, so let's do this, right? In one single price leg, say price is moving like this, in one single price leg, which is this, if you take just a swing leg, right, this one leg, you take just that one piece of price action, you'll see many times changes of character, right? You'll see as price puts in a high and a low, and a lower low, a lower high, a lower low, and a lower high, right? That's what we understand, as successful smart money traders understand as order flow. However, in between said things, we have a change of character, number one. Then we have a change of character, number two. Then we have a change of character, number three. And then another change of character, right? So in this level, let's use our supply and demand levels. Let's say there is a level of supply right here. Let's say there's a level of supply right here. Let's say there is a level of demand right here. Let's say there is a level of demand right here. Let's say there is a level of demand here. Let's say there's a level of supply here. And then supply here. And then, of course, supply in here. So we understand the order flow in this scenario is shifting bearish, right? We know it's making lower lows, lower highs, lower lows, lower highs, and lower lows. However, not so experienced traders or traders who haven't had the best mentors are seeing changes of character left, right, and center, right? So let's give the scenario number one. Here we have a supply level that takes out a low. It breaks a level of structure. There's supply number one. Then there's this level gets broken and we have supply level number two. And then we have a change of character. So there are certain smart money traders who are just trying to get involved in areas like this, placing shorts on levels of supply in here, just because it broke through this. And then as price breaks down, it comes back up, blows them straight through. They're like, okay, I was wrong. I needed to try to long instead. So now let me long from here. And I'm gonna just, now we are bullish. So we're gonna go and take out this high up here. And they get tagged in, they run a bit in profit. And then they get taken out and they're like, oh, damn. Okay, now it was taken out at break even or even in profit, whatever. Now they have supply, now they have an order on here. But then price comes up and has a new break and has a new change of character. And the change of character comes from here. And then they get stopped straight out and now they think demand is in control. So now they want to try and take a long from the demand that caused a change of character. And then they get stopped straight out there. And then they want to take a short because the long failed. And they put a short on in here. And then they got stopped out of there. And then they want to finally take one more long. And then they get stopped out there. So how is it one trader loses every trade and one trader wins every trade, which I will go ahead and show you. And the answer to that is that there are way more aspects to smart money than just supply and demand and changes of character. Way, way more. In fact, the fundamentals of smart money are built upon the foundations of order flow and the fractal nature of price. And so let me go ahead and show you now how, as a smart money trader, we would understand this market to be. First and foremost, we can see that our level of supply right here has taken out a low. That's great. It puts in the swing low down here that ultimately changes character back to the upside. So that's what we pull out as our low, and that's what we pull out as our high. And we know that we want to be taking shorts up in the premium level of price. So we have a supply level in premium that broke structure. So there is our first entry. Where are we targeting? We're going to just target our low, right? Because this low has proven weak, because as it's got up to a high, it's failed to break it. So I know this is low is weak because order flow is moving bearish. There's our first trade as a 1 to 6. Trade number 2, right? Also, what you can see that we did build right before our point of interest, which is very important, is liquidity, right? There was a level of liquidity to take, and then there were levels of liquidity to target. As we tap in, then we have a break of structure to the downside, right? And now we have a new swing leg that put in this low. And so for us, this level took liquidity, mitigated, and continued. This, for us, would be our area number 2. Understanding that the low got put in right here before having a change of character, so we can understand if we take the low, let's switch that around, take the low, price is in premium, perfect. We have a level of inducement right here just before our level of supply, which is liquidity. And then we're able to take that trade down here and take out the lows. And so there's 2 very high probability trade setups for us in between all of the noise. Now, let's go and take this example right here and let's take a look at some charts. Let's have a look at what's happening. So first types of smart money traders, they're looking at price action and they're saying, okay, well, we're bullish, right? So we're gonna probably go and make a new high. And then we can see the low is here. We have a change of character. Okay, great. Let's now take a long from here. And you can see how that plays out for them. So then they get taken out and then they're like, oh, okay, now we've shifted bearish. We've had a change of character to the downside. So now I'm gonna take shorts from up in here, right? And they're just on this continuous journey of getting stopped out, essentially. And then how we would interpret those markets is understanding, okay, well, the order flow, our swing points, swing 1, swing 2, and now our swing 3. Why? Because we've changed character. So we've had a realignment. So we understand that this level right here is liquid, very liquid, right? This is liquidity. Okay, so where does price change character from? Here, right? Okay, so we have an origin of price. Origin demand. Did this demand meet our criteria? Yes, it did. We will make a whole video on supply and demand zones and how to filter out the correct ones. We've come from a demand range. Then we've changed character. This would be something I would be looking at to take out our high to continue on from the trend, right? 1 to 10. What are we now in the process of building? Liquidity. Perfect. So now we have some liquidity to take and we also have some liquidity to target. Perfect. In alignment with order flow. Great. Let's take from our low to our high. Okay, perfect. Our level is in the discount. Okay, there are many different confluences as to why this trade will play out. And then there's another smart money trader that's looking at the market like this. So our take profit is his stop loss, and his take profit is our stop loss. So it's a battle between the two different smart money traders, right? Well, I've been tagged in. I've created some more levels of liquidity. Perfect. We're pulling back. Now taking out the high. We've tagged our short guy in. So now he's tagged in his shorts. And he's taken out of his shorts. And we have hit take profit and our long. And the difference is one smart money trader thought they could just change of characters and some internal structure, not aware, totally oblivious to the higher time frame intention, to the overall higher time frame order flow. And us understand and being in alignment with the bank's flow of orders and having our criteria, our POI swap liquidity inside of a demand range that put a leg up. It built liquidity to take, it built liquidity to target, had a over a 1 to 5 risk to reward. And so we executed, right? And that's the difference between Smart Money Trader 1 and Smart Money Trader 2. And that is why smart money trading doesn't work for few people. Thank you guys. If you want to become a smart money trader who is successful, you can go ahead and check our description box down below. You'll see links to all of our available resources, including free weekly market outlooks and breakdowns from our full course and PDF and some signals.